This is a follow-up to our webinar from August 8, 2022. And in it, you'll see why I say don't force trades. Just wait for the amazing trade to line up and then act accordingly. So let's take a look at what I mean with the SPX500. In our webinar, which I prefer to call a meeting room, we analyze the SPX500. If you look at this chart over here, you'll see that the high for the day was set exactly at 10 a.m. 1400 GMT when our webinar ended. We did go up during that period, but Michael and I both concluded after analyzing these set of charts that we did not want to go long. So the question is why? Why we prefer to wait for a pattern like this, which is clearly bearish using the amazing chart, and I'll explain that in a second, rather than go with it. Well, we want to start with what we call a drill down. We start with a weekly chart. In the weekly chart, you'll see the key level here is this blue line over here. That was the target on the upside. And what is it? It was 42.02 here. And it was the last blue amazing trading line that preceded the low. If you go to our trading guide, you'll know why this is the key level. And we're very close to it. So if we're going long, we're really betting on this level being taken out. And that was not what we saw as a good high odds trade. Now, if you went to a 4-hour chart, for example, we also pointed out that this was a key line from last week. But again, we were not looking to buy in here on a bet that this would be taken out. And it was briefly taken out with some stops and quickly retraced back below it. So in a 4-hour chart, could have gone long, but that was not a trade we were looking to do based just on this line holding or not holding. So we both concluded that as far as the SPX500, we were going to be patient. Wait for the 9:30 opening and then see if we got a good, amazing trader pattern that would form. Because to go long, we'd be betting, and I don't like the word bet, but we'd be looking for this level to be taken out, the key line on this weekly chart. And again, it was too close to it that we didn't think it was a good risk reward. So if you had been patient, and again, if we had the webinar on when this was taking place, we would have shown you how to trigger a trade against this. We had the high for the day. That was below that key 42.02. We had a second amazing trader line. That would have been confirmed here. And we had a failure here. And you could have sold when this line turned blue, or you could have waited for the second failure. And once that happened, you had your directional indicator. You had a third blue line. And we know what happens after a third AT line. Often you see an acceleration to the downside, exactly what happened. If you would have gone to a 15-minute chart, and we always say if you trade the 5, look at the 15. Trade the 15, look at the 30. We also had a directional indicator. So we had confirmation on 2 time frames here. The 5-minute gave you a quicker signal. The 15-minute, you probably would have been short somewhere in here with your stop above the high of the day. In either case, we had an acceleration to the downside, and we had a really good risk-reward trade. So, sum up, in the webinar we said we're not looking to chase the upside, we're going to be patient. After it ended, there was a directional indicator, which gave you 2 opportunities in this case to go short. Either when that line was confirmed down here, or after the failure appeared. In either case, you knew your stop was above the high of the day, and you had protection from that 42.02 level, which had to be taken out to really have an acceleration up. Market ran out of steam, third line, and down. So that's just the SPX500. It's a follow-up to a webinar. And one of the takeaways is don't force trades. If you don't like the risk reward on it, don't think your take profit level is achievable or is above a key level or below a key level, step back, wait till something forms. I mean, the forms, jump on it, take advantage, as in this case, and with a really good risk reward trade and a clearly achievable target, whether it's going to be 1.25 to 1 or a lot more, depending on your view in the market. Now, for anybody who has not attended our webinar or missed it, we're going again on Wednesday when the U.S. CPI report's coming out. That's 8 o'clock New York time, 1200 GMT. You need a link to the webinar, please contact me. For more information on The Amazing Trader, visit our website, or you can contact me directly at jay@theamazingtrader.com.